Trust. I'm chairing today. Great pleasure to do that. So welcome everyone. We've got 175 registrations this afternoon, so this is clearly a popular event. So so brilliant. And I'm looking at the screen, and according to my teams, we've got 111 people already in. So I'm sure others will come in as well. So listen, really pleased to be here this afternoon and to have this event. Hope everyone's had a really good week. I know it's really relentless everywhere at the moment. Genuinely hope everyone's had a good week, and hopefully this is a good end to all of our weeks in terms of our working weeks. I'm assuming most of us are not working the weekend, hopefully, yeah. So hopefully got something nice to look forward to as well after this. So I'm going to ask everyone's permission, if that's okay, to record. Well, in fact, we've already started recording. I can see. We are trying to get a bit of a library on the One NHS Finance website. Of all things Working Day One, and I did it. If you go on the NHS One NHS Finance website, and I went on there early on, just typed in the search engine within there Working Day One, and literally popped up quite a lot of material that relates to the organisations that are presented today and also others, but also helpfully I found the video of the last workshop we did back whenever it was a few months back now, where we had a similar sort of session. So you can go back and watch that if you missed that, if you want to watch that. Equally, this one will be up there. So we're trying to get a bit of a library together, because what we know is, well, certainly as at last March, when HFMA did a publication in their Healthcare Finance Journal, at that point there were only 11 organisations across the country of about 250 or so that were running with Working Day One. Now I know that number will have increased since. There's at least 2 organisations local to where I'm currently sat that have gone that have converted to Working Day One in that period since. So the Isle of Wight Trust and Southern Health, I know, are already successfully sustaining Working Day One. So there will be more than 11 now. But the point I was going to get into really was we're still in a small number of organisations, and therefore the interest is quite great. When HMA did that piece of work, just for awareness, when HMA did that piece of work, over 70% of all NHS organisations were reporting with between Working Day 5 and Working Day 8. So that's kind of, if you saw the sort of bell curve in terms of where everyone's at, say at that point 11 organisations won pretty much nothing then, because if you're going to do it, you don't do Working Day 2 or 3, right? You either do Working Day 1 or not. So it's Working Day 1, 11 organisations, probably a few more now. Bit of nothing. Bit of a bell curve then in terms of Working Day 5, 6, 7, and 8, and then it sort of tapers off. But believe it or not, there were examples of some organisations reporting way beyond Working Day 10, and a small number, but some stragglers as well. So as you can imagine, NHS England are keen to advance reporting lines so they can continuously bring forward the regional and national reporting line, so that all the way up to Julian Kelly and through the regions we can get sort of faster information. But listen, what I would say in an organisation, Portsmouth, that's sustained Working Day One from April 2001, so over a year and a half now, what I would say is genuinely cannot overstate the importance of being able to know the financial position on the first opportunity after the month is closed, to be able to be in a position where the following day, so sometimes 8:30 on Working Day 2, at my trust leadership team, all the execs, all the divisional directors, and I can give a clear articulation of the previous month's forecast, actual financial position in some detail, and articulate the actions we need to take, and get a full month's worth of traction on those actions, rather than lose a month before I even can display the actions to the team. So really can't overstate the power of that. There is something about the not just the timeliness of information, there's something else about the quality of information, and something I know Portsmouth and others, and probably all of you have worked on as well, to make sure that when you actually do present something, whether it's Working Day 1 or Working Day 5, 6, 7, 8, whatever, that is something that people can understand, take decisions on quickly and move forward. So that's a separate thing, but for me, Working Day 1 is, I wouldn't go back from that now, ever. Portsmouth is definitely not going back from that, and we'll hear a bit more about that later. So what we're going to hear in this session is a bit more about, we're going to hear from 2 organisations this afternoon. We're going to hear from Leeds first of all, and then we're going to hear from Portsmouth later on this afternoon also. There are others, so it'd be good to broaden the showcase in future events. All right, but today we're going to hear how they did it, what the monthly timetable looks like, what the day one timetable itself looks like. And I can say with some experience now, I've been done this at Portsmouth with Jess and others here for the last 18 months or more, the day one process and everything building up to that, but certainly the day one process is in it. You have to industrialize things. So my slot is at 2:30 on a day one, and by 3:30 we've signed the position off, and then between 4 and 5 it gets cascaded out to budget holders. Jess will describe all the work that goes on to get to that position later on. We're going to talk about accuracy because there's a lot of myths around accuracy. There's a lot of myths that suggest it's not accurate, and I would actually put my name to say it's completely accurate. So and you don't lose anything in this sort of accuracy front, because all of our financial reporting, whether you're on working day 10 or whatever, there's going to be estimates built in, and you know, there are going to be some estimates in there. It's the bit that we've worked on at Portsmouth, and I'm sure Leeds will describe the same, is it's forcing yourself to make those judgments earlier in order to conclude on a position that allows people to make decisions. So that's, I don't think you lose anything much in accuracy on that, and certainly our auditors have been extremely complimentary around the Portsmouth position and never identified any issues there. We're going to get into team engagement, so it's, you know, it's not just about people like myself, Jess. You'll hear from the Leeds team. It's not just about people like us saying, yeah, we're going to do work in day one. You've got to be able to take your whole team with you, and you've got to be able to take the interconnected teams with you as well. So if you outsource bits of the process or whatever else, but you've also got to take all the feeder systems and all the people that are involved in the feeder systems, whether that's pharmacy team or anybody else. You've got to take them on the journey too. And we're going to hear a bit about how others have done that, receptiveness, challenges along the way. I hope also you'll hear about some of the benefits. I've already described one in terms of my ability to report very quickly and to take action. I hope, therefore, you hear broader benefits as well described through the afternoon. So the way we're going to run the afternoon, we're going to start off in a minute with Leeds. Tony and Michael are going to take us through and lead the session, but we've got members of the Leeds team, which is really powerful, I think, and builds on the session we did last time, but in a really powerful way, because we're going to hear from colleagues in financial planning, reporting, financial systems, management accounts, capital. We're going to get a wider team insight into what it takes to do work in day one, and I think, you know, Leeds were amongst the first in the country to have done this. So that's going to be from in a minute. I'll hand over to the Leeds team, and we'll take about an hour on that. And then for the last bit of the session this afternoon, then I'm going to hand over to Jess from the Portsmouth team, who's going to pick up and specifically hone in on the other myth. I think the other myth, which is if you've got an outsourced ledger, particularly if you're working with SBS, you can't do this. Portsmouth were the first in the country to prove that we can do this on SBS. Jess will testify to that. We are on SBS for payroll and for financial ledger services. We have been for many years, and we pulled off working day one with SBS I would say very easily. It's not, well, there's a lot of work gone into working day one, Jess. Yeah, you'll describe that. But what I'm saying is the SBS bit of it wasn't the challenge, I would say. Jess will give you your own view. So don't let anybody tell you that you can't do this on SBS or any other outsourced system, because it's not true. We'll have some reflections at the end, if that's okay, and then we'll kind of close. But listen, usual thing, right? We've been running team sessions and Zoom sessions and that now for. We're probably not doing our family quizzes on Zoom anymore, but you know, but we're well used to using Teams now. So the usual thing I would say, pop yourself on mute if you unless you're coming in, just to help the sort of, you know, the sound vibrations and so on. That'd be really helpful. And I'll pop myself on mute in a minute when I hand over. If you want to come in at any time, I'd love this to be interactive. You know, by all means, you know, store up your questions to the end of the sessions, and we'll have a bit of a Q&A at the end of each of the two sessions. But listen, if you've got any points, just put your hand up and we'll pause, we'll come in. I'd love it to be a bit more interactive, because that's kind of what we're trying to get at this afternoon. So we're now at 149 people in the room. Wow. Okay, excellent. Big session this. Really pleased. I'm going to hand over. Tony, Michael, are you ready to come in on for Leeds and lead us through? And I'm going to give over the next hour to you, but I'll come in and maybe chair the Q&A part if needed, but equally happy for you to just direct that yourselves. You'll see the hands go up. Is that okay?
Yeah, thank you, Mark. I'm going to kick off the first element of the presentation, and other colleagues will join in a minute. I'm just going to ask Karen just to share the slide, and I'll introduce myself. Thanks, Karen.
Can you say those? Yeah.
Thank you. Perfect. Yeah, my name's Michael Kirtley. I'm one of the assistant directors of finance, and as Mark alluded to, just thought being asked to share sort of our experience of implementing Day One, how we went about it, what it actually physically looks like on the physical day, how we handle that, and yeah, the benefits as well associated with that. So in just a little bit of Leeds in context, both a general hospital and a specialist centre as well. Our turnover is around about 1.7 billion, which has increased significantly during the pandemic. We were around about 1.4 billion. Serve a population for Leeds of just under 800,000, but also provide services nationally in terms of some of the specialist children's and cancer services that we provide. Next slide, Karen. Mark's alluded to this. It is very much a team effort. I'm here representing Leeds, but it's testament that we achieved Day One, and that is down to the team. We have received outstanding for our use of resources from the CQC, and we're just currently going through our Future Focus 5 level 3 accreditation. Again, but we're one of the first trusts in the Northwest to do that. Next slide, Karen. So how have we done it? Absolutely, I would just stress it is very much a team effort. Next slide. And small actions by wide spread of the finance team has resulted in the big change, and in this case what we're talking about is obviously our move from Day One. Slides. Very much our move to Day One is sort of embodied into the what we term our finance the Leeds way, and in essence this is our improvement plan. We have one every year, and it's I suppose it ties in. Overall, we're one of the trusts that links in with the Virginia Mason. We have a Leeds improvement methodology, and it's all very much about continuous improvement. And as we touched on the previous slide, incremental changes resulting in more significant change at the end of it. Next slide, Karen. So let's move on to the Day One. So the challenge that we were set by the DOF, and this was way back in 2017, he'd successfully implemented it at Bolton, his previous trust, and I think one of the first actions he took, and it became on our Finance the Leeds Way improvement plan, was in essence, we need to improve the timeliness of our financial management information to allow quicker decision making and facilitate appropriate corrective action by both the trust board and operational managers. And all of this to be achieved with a little reduction in accuracy. And as you can see, also our reaction there initially as a team as to what we thought of that. Nonetheless, it was a very clear mandate that we were given. And at the time, we were reporting on working day 6, so we had to shift that and move it to working day 1. So how did we do that? Basically, we set up a project team, and that was ensuring we had representatives from all sort of functions within finance, so AP, AR, making sure procurement were engaged as well. We used the Northeast Patches Oracle system, and that group met. It met regularly every 2 weeks. But beneath that, and at the time I wasn't leading that particular project, but I supported one of the subgroups that resides under that, because part of my other role is I support the medicines management and pharmacy. So I was tasked with how we handle the interface problem with GAC. Next slide, Karen. So what we did, we basically looked at all of the, I suppose, interdependencies, what fed into what, when, etc. Reviewed every step of the timetable. I think one of the big factors for us was, when did payroll go in? We pay relatively early as an organisation. We pay on the 27th, and the hub is, or the payroll file is usually available about 6 days. So that was one of sort of our main drivers and starting points, almost, as it were. And then it was a case of looking at everything else, looking at the current timetable, what we needed to do to try and bring things forward, and allow that. And as part of that process, we tested 1 month on our test system, and so did see, could we actually do it? That was the whole journey for us, took around about 6 months to implement, and on the final month we did actually run it through into our test set. And the other thing we had been doing as well had been to estimate, going back sort of 6 months, if we based on more increased estimation, what did that look like if we had that intelligence, and then compare it to the intelligence we had from actually closing down on working day 6. And then, to be fair, we didn't find a great deal of difference. We were talking thousands rather than anything else. So one of the key things regarding the project was just making sure we properly engaged. So we used to write a report into the, we have what's termed as a guiding team, which is chaired by our Director of Finance, and it's got representatives from the sort of the leads of the service, from, say, procurement, financial management, and financial services, and write a report as to where we were in terms of making progress against that, any issues that we may want to raise, and also proposals of what we wanted to take forward. So, for example, how we were going to take the pharmacy interface, that we would estimate X number of days based on the actual figures, and run it through from there. We also engage with the wider organisation. So my predecessor and other colleagues that were on the main group went to the general manager. We have a general managers group that meets on a weekly basis, and we just provided regular updates, and then got their thoughts and sort of input into it, and they were very much, I think, enthusiastic overall about that. And also, what we did as part of the transition as well is we issue budget letters at the end of the month, as our budget reports go out on day 6, and we just started to notify them of the proposal and the changes to just keep things. So some of the lessons that I think we sort of reflected on and learned is absolutely have a detailed timetable, keep reviewing it, and making sure, I suppose it says on the slide there, just a live document. I think one of the sort of sensitivities we encountered with trying to take the team with us was just recognise sort of the festive period, etc., and allowing colleagues to have that time off. And I think there was a bit of a misperception that actually we would be doing working day 1 straight after, as we came into the new year. And obviously we amended the timetable to reflect. I think we report working day 1 after Christmas, 3 days into the new year later. And it's also fair to note, we also at year end we report on working day. We do, I think it's about working day 6 off the top of my head. So we keep it later so we can get all of the ledgers and reduce the amount of estimation that we put at year end. And I think we had a little bit of confusion on the month. We did a bit of a trial run that some people actually thought it was the month that we were going ahead. So it's just making sure you get that communication channel, and whatever works within your organisation and your team is over communication, I think is certainly would be helpful. Next slide, Karen. And I'm going to hand over to Mike Shaw.
Hi. Yeah, so close down from my side of things anyway really starts at day -5, where we close the sub-ledgers. So in AP, they will do their final payment run, and then they will close it, and we will run the PO accruals here, which is an automated process, which generates all the accruals and posts them all in to the ledger. Then AR do close, but they do what we call a close pending, which allows them to still go in and carry on receipting cash, because we might receive cash again that we want to apply against invoices. That doesn't affect the INE position, but we want them in our cash position. So we open the cash every day from day -5 to day 1, and we still post that cash. But it doesn't affect INE. Once AP and AR have finally closed, we will still, in the systems team, be putting in some GL feeders. So these will be things like the stock feeders and any agency feeders that relate to that month, things like that affect INE. But we will always post them by the close of play that day. If there's something we haven't received, which is a rare occurrence, then we will put an estimate in based on the previous month or week if it's a weekly feeder. Yeah, so we do a final close on day -5, and that allows management accounts to do to finalise their position over the next 2 days. I think that's it for me.
Thanks, Mike. Back to me. Okay, so I think one of the just sort of touching on sort of some of the outputs from the day 1, particularly sort of the management accounts reports. As part of our preparation was a review of, I should say, leads. We have 5 sort of teams within sort of the management accounts that are headed up by assistant directors of finance, and one of the key tasks that we did was just to review what we were actually producing across all of those teams on when the results were being published. Apologies, somebody's just trying to dial me. And what we discovered was actually there was overproduction in there. There was manual processes, inconsistencies. Yes, and to be fair, yeah, we were just not doing it in a standard way. So we reviewed the various sort of teams' outputs, had a look and sort of engaged the sort of the management accounts team to see what, you know, comparing some of the information that the different teams were producing, what was particularly helpful. And in essence came up with a sort of a standard production pack that we provide out, what we would term our clinical support units, triumphant team, that they would receive with sort of the key information on. And I think on the next slide, if memory serves me right, we've got an example of, can you flick on to the next slide and I come back to that? Thanks, Karen. So yeah, in essence, this is what it looks like. We have the budget on the left, annual budget on that side, and then sort of the year-to-date position. And also we report on, we produce forecasts every month, and we also report against that. And we sort of agreed the standard sort of headings around income pay, non-pay, and provided a sort of agreed narrative and approach across there. But I think if we hadn't done the day 1 exercise by reviewing our existing processes, it's just given us the opportunity just to standardise and just to challenge ourselves to think, is this information relevant? Are we producing it in the most appropriate and efficient way? And there we've listed the benefits there, and we've more or less maintained that standard report since we introduced it in 2017 and kept it going. It depends what your results look, whether you look like that lady at the on the end of the picture there, but move on, Karen. And I'll hand over to Tony Elliott, who's going to talk through the capital and cash aspects.
Afternoon all, my name's Tony Elliott. I'm one of the Assistant Directors of Finance at Leeds, and I'm on the financial accounting and financial services side of the business. So I'm just going to give a quick overview on how we deal with capital in day one reporting land. So to start off, capital really is just another form of non-pay expenditure. So all the transactional processes and close downs and PO accrual issues Mike's already talked about apply equally to capital, albeit we have slightly bigger numbers and we have slightly different rules, but the processes are pretty much the same. So when we moved to day one reporting, the sort of challenges that we faced was similar to what management accountants have outlined. So we had lots of manual interventions to finalise positions. We put manual accruals going in, recharges from revenue budgets for things like staffing, correcting of coding errors between different capital schemes, and then we'd be rerunning reports and reviewing them and putting more further manual journals in just to get to a position. And this was all occurring against a background of increasingly levels of the capital expenditure and the capital programme. So our capital programme, we spent 23 million on capital back in 17-18, which was around when we brought day one in. Last year it increased fourfold, so we spent over 100 million last year, and this year we're able to spend 112 million to fulfill the capital programme. We looked at the increases in capital funding. That was a lot of increases in external reporting requirements, particularly for the NHSI returns, for reports that we send to the board, and now recently the ICB are wanting regular capital updates. And month-end forecast variance is one of the things that we introduced alongside day one. Is we brought a financial framework in the trust for a much greater emphasis on forecasting rather than variancing against budgets. It was very much what's the run rate, what's the forecast to come, and how do we perform against the forecast. In capital land, then our forecast was always focused on year end and just making sure we delivered the year end CRO targets. But the in-month forecasting was very much ran secondary to that. So what do we do about it? We created a new monthly reporting document which directly links up to the general ledger, and that was automatically updated every time the general ledger is updated, so that avoided the whole load of rerunning of reports. We worked with our capital programme managers to promote far greater use of the Oracle ordering system, so particularly across estates and informatics, where they were very much on a manual ordering basis or using their own systems. So this meant we got a whole much better information from system-generated PO accruals rather than having to make manual ones as we go along. And then, consistent with the way we looked after the expenditure side, there's a much greater emphasis again placed on budget holder accountability. So in the case of capital, we have 4 capital programs, so there's 4 program managers. So we had monthly meetings with them, reviewing their areas, understanding what was going on, what variances we could expect, and that in turn helped us to work with them on improving the capital forecasts on a monthly basis. Next slide, please. I always wanted to say that. The results of all this were a much more efficient process, much reduced need for manual interventions to produce the reports, a far better level of reporting for the programme managers and for stakeholders across the organisation in capital, much better in capital forecasting, and which then promoted much greater ownership of the budgets and the budget reports with the programme managers. In turn, that improved their understanding of it, and then on to better decision making. So with improved forecasting and day one reporting, we're far sooner able to identify whether there might be capital slippage and then take corrective actions, go find something to replace the programme that was due to slip. And again, this produced much better improvements and engagements and working relationships with capital programme managers. Also on the day one report, on day one itself, we include on the reporting schedule for the Director of Finance, we have a capital and cash section, which Adele's going to explore in a bit more detail in a minute. But you can see on there, there's a couple of examples of reports there. So the upper one is the actual day one report that goes to the Director of Finance. So you're probably struggling to read that on there, but it's basically showing the overall capital programme, the 12 million year-to-date forecast, which was 33, year-to-date actual, which is 33, and the comparison with the run rate for the previous years, so we knew where we're going. And one of the improvements we've added in recent times is we've added a column at the end to identify how much remains to be spent on each of the programmes. And that gets particularly important as we move towards year end and we come under increasing scrutiny and on how to make sure we're going to fully achieve our CRL and spend all the capital monies. And the report at the bottom, that's more of an example of an individual one that goes to the programme managers by scheme. So that's showing for each individual scheme what the forecast was against the expenditure and with an explanation of the variances. And with that, I'm going to hand over to Andy to talk about income.
Thank you very much, Tony. My name's Andy Sadowski, and I'm the head of income for Leeds Teaching Hospital. Nice to meet you all. So yeah, the aligned incentive contract was a major contributing factor to driving the introduction of day one reporting. Karen, can you move on to the next slide, please? So it requires kind of close working relationships with commissioners to agree and share our monthly positions. So that's currently for kind of the Leeds Place, West Yorkshire ICS, and NHS England Specialised Commission, are kind of the main commissioners that commission our services. A high proportion of our income was fixed through the introduction of the AIC. The variability in income was mainly previously kind of back when we introduced the day one reporting was around kind of our non-aligned incentive contract commissioners and also around kind of NHS England commissioned drugs and devices, which were kind of variable in nature. We tend to use our flex data 1 month in arrears to assess the variable commissioners. Flex data for us was very accurate, about kind of 95 to 100% fully coded, very little movement. Then clinical support units would assess the position, would accrue income where kind of known income changes were agreed, and would also kind of transact contract variations on a monthly basis to ensure that they get fed into the income position. We would close down the income position and we still do at working day -2, close of play. Information goes out to the trust clinical support units at working day -5, with the exception of kind of year end and Christmas, as Mike explained earlier. A new process was established for the estimated month to assess kind of activity delivery in month. So we assess kind of the live PAS data. So PAS is kind of our patient administration system at the trust. So we look at that the first 20 to 22 days and profile forwards based on kind of working days, calendar days, based on point of delivery, to see where the activity position is for recent months and kind of use that as a way to kind of see if that's in line with kind of non-pay expenditure. For day one, the team produced an activity report at a business unit level to show where we are compared to kind of baseline year, with an adjustment for working days. Invoice arrays off the back of flex could sometimes be outside of the account receivables window. So sometimes it need to be accrued into the position if it didn't kind of go in straight away. Kind of moving forward onto kind of this year, the kind of level of variable income from commissioners is relatively low. The main areas of volatility are for tariff excluded drugs and devices. Currently we use the spend detail to include in our day one income position, and kind of a month in arrears we would check the spend against the commissioner data and highlight any kind of material discrepancies, which are then kind of followed up and investigated into. And around kind of year end, we usually set up a couple of groups, working groups, to look into that and kind of work across kind of pharmacy and management accounts to kind of understand any of those kind of big movements. Currently for the service agreements income, we're only really raising invoices for non-English commissioners due to the current financial framework in place. And that's for mainly the service agreements related income that we manage, but we also kind of raise invoices for things like provider income and things like that. So challenges kind of moving forward in terms of kind of next year for 23-24, possibility of kind of more variable income in relation to kind of the elective recovery, rumours of potential PBR return for outpatient elective activity, and also potential movements around kind of best practice tariffs and sequin. So yeah, I think that's everything from me really. Yeah, so I'll move on to, I think this is Mike, is it? Or is it Adele?
It's me.
It's Adele. All right, cheers Adele.
Hi, I'm Adele Breer and I'm one of the Assistant Directors of Finance at Leeds, covering planning and reporting for the Trust. I've just got a few slides to share that will provide an overview of how we run Working Day 1 and the involvement. I've got some standard documents just to share as well. So we have a 9 AM meeting where we present the financial position to the Deputy Director of Finance. As Mike said, it's a team effort. The transition to Working Day 1 was a team effort, and all the work that goes on behind the scenes leading up to the actual Working Day 1 is a team effort. In the 9 AM meeting, there'll be representatives from capital, cash, financial accounting, systems, income, management accounting, a whole wide of range of people, and we'll all present our own sections for review and challenge. After that meeting, any questions that have been raised, anything that requires further investigation, we'll go away, we'll look at that, do further analysis and action any changes that might be needed, and prepare meeting papers for the subsequent meeting later in the afternoon. Papers are always circulated in advance, and we have a 4 PM meeting where we present to the Director of Finance. Again, similar team presentation of relevant areas, but with more focus on the CSU financial positions this time. So whereas the 9 AM meeting was more trust level, this is a bit more detailed and covers the clinical service unit positions. Following that meeting, the position is signed off by the Director of Finance, and he will brief the position to the Executive Directors. And then following that, the budget holder cost centre reports and CSU narrative reports will be circulated out. So this next slide just shows the standard agenda that we use for both meetings, but you'll see different paper requirements at the different meetings through the day. And we have more papers for the later on meeting, but again, it just shows the topics that we discuss and review as a standard in each meeting. The next slide then just gives an example of the level of report that we use. So it's quite high level. This is the trust-wide report, and it just shows you the high level of categories that we report against. But behind that, there's a lot of standard work that's gone into producing a lot of detail that actually helps populate the reasons behind any movements. So the left-hand side of the report will show actuals in the month compared with what we were expecting them to be in the month and the variance. And then we have comments and narrative around that. And then the right-hand side of the report is the actual run rates per month and how they've changed from the previous month. And again, comments around that. And then benefits. I mean, we've spoken at the beginning of the meeting about benefits, and there are the obvious benefits in terms of the numbers are available quicker. It helps with the production of the external reporting and monitoring returns we have to do. And the organisation is aware of any financial pressures or going off plan, so corrective action can be taken earlier. But we do also find that it engages better with the services and the clinicians and the budget holders because it's real-time information. So they're getting their information on Working Day 1, and it's not a week and a half out of date. And there's just a quote there from one of the associate directors in estates and facilities, just about the benefit that they've felt from it. Thank you. Hand over to Mike.
Yeah, thanks, Adele. And it's fair to say as well, straight after that 4 PM meeting, our Director of Finance informs the board straight away of the financial results. He also gives a heads up to NHS England as well as to those results. Fair to say it's not. I suppose don't get hung up on perfection. The majority of our costs are pay costs, and that is absolute from the feeder. that's put in and the adjustments that we do. We've refined the process as we've gone along. So we'd noticed in the last few months we'd had a bit of variability on our pharmacy interface when we compared them to actuals on day one. It didn't really impact on the overall trust position because the majority of our drug spend is passed through, so it is matched through with income. But we took the opportunity just to re-engage with the management accounts team to say, actually, could we provide you the pharmacy and the drug information just a day later? Would that allow you enough time to do your necessary adjustments within your the clinical support unit that you're looking after? But it would provide us the opportunity to just have one more day of actuals. And we also realised that we'd been factoring in an estimation on the sort of the days in the month, and realising that actually on a weekend there is still activity, but it's at a lesser amount. So it was just sort of changing it, etc. So yeah, continually improved. Touched on a little bit earlier there just about the improved board assurance. I think since we've been on this journey, I don't think we've missed a day one. We've always maintained that timetable. Our director of finance, absolutely, it is key to him, and sort of listed there on sort of the benefits. I think one benefit for the management accounts team is we start straight away after that day one close to then look at the extrapolation effect. What impact does that have on our forecast? And by working day 6, we will have submitted forecast for all the clinical and the corporate support units. They're submitted by the CSU directly into Simon, and I suppose it frees up then the rest of the month to try and put corrective action, etc., in where needed. And yeah, touched on very much a team effort, right the way from AP procurement all the way through into sort of the management accounts and the financial reporting team that Adele heads up. And I think we've come to the end of the slide. So thank you for listening.
Thank you for that. And listen, I'm going to probably help if you are. There's lots of questions in the chat box, so I'm going to go back through those, and because I was taking some screenshots that I want to go back to. That's all right. Is that right? Is that all right, Mike? And you and the team can just field them as you go through. So some of this you might have covered as you actually went through it as well. But I'll just try and pick out the ones that I think there's a few, to be fair. So there's a really good level of engagement, and I think we've still got just a second. We've still got 151 people with us. So it's brilliant, fantastic. Good presentation. So Mike, Tony, team, first one's from Stephen Simmons. You might have covered this off, but let's just come back to this just to re-emphasize the point here. So Stephen asks, how much of this is an earlier close versus how much of it is a faster close? Who wants to take that?
Good question. Absolutely, it is a earlier close, but I think we sort of had a bit of discussion before we came on the call, and I think the benefits impact on different teams. So take financial planning and reporting, it allows them that opportunity now to fill in their PFR returns sort of straight away from the day one, and increasingly that information, I suppose, is getting more demanding, and the timescale for that is moving forward. So it gives us the opportunity to do that and to make sure it's properly checked and balanced before it gets submitted in. There have been benefits in terms of, and I might have to put this in the chat when I dig through my notes, but we have realised some time and allowing more opportunity for review, and it was particularly at the time, bear in mind it's 4 or 5 years ago for ourselves, around sort of the clinical CSU's income positions. By estimating income earlier, it has provided an extra 2 days for them to review that information that we've got, and we also found that I suppose the flex data was pretty robust and reflective of where we were, and it's certainly, I think it's freed up more time to review. Inevitably, you're right, it is bringing in your feeders, etc. Earlier, but I think one thing I've noticed as well, we've maintained the discipline of achieving day one, and prior to that, I think we used to slip. And I think the discipline of actually just doing the day one, making sure you hit that, does free up some additional time.
Thank you, Mike. Listen, I'm going to ask Jess to pick this up later on in the Portsmouth presentation, but and I'll probably get this wrong, Jess, but just the Portsmouth version of that answer to how much of this is faster close versus easier earlier close. I won't answer all the questions, though, but this one is, I think it's probably important just to say Portsmouth are closing at about day 5 or 6, and that's the point that Michael just said about potential to drift if you're not doing work on day 1. I think Jess will probably tell us that we've effectively got a 3-day process now, which means we start on day -3 to effectively squash the 5-day process into sort of 3. Just by shunting it to the left, bringing it forward. But I think the key bit of what we've taken out in terms of the faster bit, I think, and Jess will correct me if I'm wrong here later, is we probably used to spend 2 or 3 days deliberating on some of the judgments, whereas now we make those deliberations within a few hours. So I think there's a combination there for Stephen of earlier in terms of all the processes shunt forward, faster in terms of the judgment bit. But so is that fair, Mike, for Leeds as well?
Yeah, I think you've articulated it slightly better than what I was trying to say, but yes.
No problem at all. The next one's from Joan Grant, and she asks specifically, what tool are you using for your standard reporting pack?
I can take that one if you like.
Thanks, Karen.
So all of our reports run from Oracle Cloud, and we use Smart View reports, which means that as soon as any amendments go through the ledger, we just have to click refresh and the reports are immediately updated.
Perfect. Thank you, Karen. Thank you. Really helpful. And listen, thanks. Before I forget to say thanks at the end for this bit, which is, and you've done a lot of presentations, Leeds, on working day 1. Thank you. And this presentation online from the last session we had, you really built on that this time in terms of really getting into the detail and showing us some of the, visually showing us some of the output and report formats and so on and so forth, and the timetable for the day and everything else. So I think that's really started to unpack it, certainly for me. So so thank you. That's really helpful. And thanks, Carol, for that answer. But the next one's from I'm going to go to is from Jamie Weaver. Thanks, Jamie, from Sheffield Children's FT. It says, as part of the reporting process, how much of your data and insights would be considered qualitative versus quantitative? So to Jamie, as part of your reporting processes, how much of your data and insights would be considered qualitative? Am I frozen? Tony,
broadband slightly went there. So in terms of qualitative, I mean, we do provide quite a bit of narrative in terms of the position as well as the numbers, particularly around some of the forecasting where we've got the variance. I'm thinking particularly around some of the sort of the capital planning, etc. There is a report that we provide as part of that. I'm just trying to, I suppose, understand the question a little bit more. I don't know who raised it, whether the...
Hi, it's Laura from Sheffield Children's. Just pull him in. Jamie, go ahead and just clarify.
Yeah,
thank you, Laura.
It'd be helpful.
Jamie, you there?
I guess what I mean is how much narrative would you put into it in terms of insights for your budget holders and the people you're reporting to?
Right, with you, understand. So for the actual day 1 meeting itself, it tends to be I suppose the numbers that we're presenting for the CSU. But when I go into that meeting, the unit accountants who support myself will provide me an underpinning report, as well as in our standard reporting pack, the one that was on the slide. There is another tab there, and we've termed that working day one, and we'll do a comparison of our forecast to where we thought we would be for the month, and highlight any sort of key variances, etc. And we'll have a bit of narrative there. It's not shared in the working day one report, but it provides me, I suppose, the insight to go into the meeting that I fully understand what happened with the CSU, why we've gone and deviated from that. And we do provide, as I sort of alluded to, a bit of analysis around sort of the capital programme and slippage, etc. And Tony again provides a little bit of narrative, but it is mainly numbers, to be fair, that we present. But to be fair to Adele and Karen and the team, on that spreadsheet that Adele presented, you can see some narrative sort of comments there, so we just understand some of what the key variances, etc. are. As well. Does that help?
Yeah, that's great. Thank you.
I'll just add to that if I might, Jamie. So yeah, as Mike said, from a trust-wide I&E position, we go through the main trust variances with a bit of an explanation of what's causing them against the forecast. And then on day one itself, we report the bank and cash position with a commentary on that, which we never used to do before. We do capital, as we've shown in the example on the slide pack. We also do the debtors and payments side of it as well. So we report that the total debt, how much of it's 90-day debt, who are the worst offenders, what we're doing about it. On the payment side, we'll report how much we've paid during the month and what the BPPC figures are for the month, and if there's been any notable variance or drop in that, we'll put an explanation for that as well. And it's a bit of a commentary on the cash, on what's come in and anything unusual or things that haven't come in and how it compares to a forecast as well for that. So that's all sort of been developed since we moved to day one. We didn't used to do that in the working day 6 regime.
Perfect. Thank you very much.
Thanks, Tony.
Thanks, Tony. Thanks, Michael. Jamie, is that okay?
Yeah, great. Thank you.
Perfect. No, thanks for coming in and clarify. Right, I'm going to keep going with the questions actually, because there's loads of questions here, and we're ahead of time. So if that's okay, the whole point of this is a bit of a working session. So the next one I'm going to go to is from Sean Wayman, South Tyneside and Sunderland FT, and he's specifically asking what is the system implications of closing your accounts payable 5 days early. So system implications of closing your accounts payable 5 days early.
I can probably answer that. So we close the period on day -5, but the system itself isn't closed. It just means that when we put any more invoices in there or make any payments, they will go into the following period. So for a functionality point of view, AP continue to work, they don't stop. It's just that we have to have a cut-off point so nothing affects I&E while we're finalising the position. So it's only closed as the period that they can still carry on working, but it goes into the following period.
Yeah, no, it makes perfect sense to me. Hopefully, Sean, that makes sense as well to everyone else. Thank you, Mike, for coming in. Right, next one, I'm going to go back to Steve Simmons again. That's a really good question, and I suspect it's one that's probably a lot of people are thinking about if you're not already doing it. So, how do you deal with staff not working on the key day of the week or the key days of the week in terms of your month-end process? How are you coping with key people in the team who need to be around for working day one and the days work leading up to working day one process?
Well, from my side of things, I just make sure there's cover in the relevant teams. So we just make sure that there's cover for the last 5 days. That's all really.
And likewise, from I suppose the management accounts, there will be times when a unit accountant is obviously on leave, etc. But again, just putting arrangements in place for that sort of cross-team cover. I look after about six clinical support units or corporate support areas at the moment, and I have a team of four accountants who support that, and we just agree as part of the team as to who can cover what. An element I can pick up and cover, but other colleagues within the team will be able to ably sort of step in as well. It's just a little bit of thought and planning around some of your dates as to how you can work around and accommodate.
Yeah, no, thank you both. And again, really good question. But actually, you know, if you're closing on working day 5 or 6, you've still got the same issues.
Yes.
Whatever timetable you're working to. And I think you've already said that year end you'll have a bit more time, and of course, you know, planning that in as well. And I think you also said Christmas, because of the sort of working day minus whatever your process is, in Portsmouth's case -3, but you know, you kind of breathe out a bit more to allow people not to eat into the Christmas period.
Yeah,
so,
and it's very much key here. It's sort of to keep the team engaged. When we did working day 1, just recognising that we tend to close, for example, payroll early in December, and financial services close a little bit earlier, etc. So they can have the time off, and it's just being fair to management accounts colleagues to allow them to have a break as well, enjoy Christmas.
So let me just actually my own question here. Then just checking in, because so actually it's 10 months of the year you're reporting working day 1.
Yes.
Year end by definition, that's got to be auditable. So you take an extra 4 or 5 days, as you said.
Yes.
And Christmas, for kindness reasons in terms of staff, you allow a little bit more. So actually it's a 10 times of the year you're reporting working day 1, which I think is the same as Portsmouth.
Yes, absolutely.
Yeah, no, thank you. No, helpful. And it's good to unpack these things. Right, next one, there's loads. Next one, so the next one comes from Karen Masia from C&W Partnership Trust. So do you find any difficulties with accruals for agency staff?
I don't know, Mike, if you want to come in, but not to my knowledge.
I think it's more something Steve Pearce does on his side. So I don't know if Karen knows if there's any issues. We do put agency feeders in, but
I'm not aware that we have any issues, but Steve is the person that I would need to get more information from. So I'm happy if people want to contact us, and we can get some further information after this session.
That's fine. So it didn't sound like there's any issue. I know. Listen, I'm going to just speak for Portsmouth here as well, because so I know Portsmouth. We've got our we've got an arrangement where, well, Jess will unpack this a bit more. Again, I keep on training Jess. But in terms of the vast majority of our agency staff comes through an organisation, in our case called Bank Partners, and obviously therefore they've got the rosters and the shift fills and everything else. We're able to, you know, it's basically we've got the feeder systems there that allow us to take that information, and if there are any sort of individuals outside of that, then they get corrected in the next period. But that's not perfect, but it's not material either. So okay, good. Let me keep going. Right. Noreen Nunn has asked, do you have a supplementary pay run, and how do you deal with it? Because in Noreen's case, their pay run comes in on day 2. So do you have a supplementary pay run, and if so, how do you deal with it?
we occasionally have supplementary payrolls, but they're always done by normally day -5. I think maybe there has been one in the past that went in on day -4, but again, Steve Pearce, who's not on this call, he would inform everybody what the impact of that would be, because they do an analysis before it goes through.
And by and large, for an organisation our size, supplementary pay is fairly insignificant anyway in terms of the overall position.
Yeah, I understand. Okay, materiality plays a part, doesn't it? Oh, I've got a hand up. Was that a deliberate hand, Laura?
Yeah, I was just going to add that at Lancashire Teaching, because we use SBS, we have like usually straggler pay files and the supplementary files. And what we do is we back them out. We back the costs out the I&E via a journal and just move it to the next month. So it's out we close it by working day 1. But somebody recently at Blackpool Teaching Hospital has come to us and said that there might be a way around ESR to change the pay date, so we can just manually change the date to the next month. But I don't know if anybody else is using SBS and they know about this, but we're going to be testing it soon to see if it works.
I'm going to hear about SBS in a minute when you hear Jess. Jess, do you want to come in on that point at all, or to save to?
Yes, our supplementary pay run is usually on about working day 2 for us, so we will put a provision in the accounts and then back it out when it comes in. So it's not material for us at all.
Yeah, it's not material, but the 2 weeks and the supplementary, we just back them out and then it's done and dusted.
Perfect. Okay, so hopefully that answers that one. Right, I'm going to keep going because we've got quarter of an hour for this bit of the session, but we can we've got a lot of engagement, so I'm just going to keep surfing this one. Laura, hand way back down again. Do you want to come back in? No. Okay, so I'm going to go to Jim Mays. Jim, you got your hand up?
Yeah. It was connected with that supplement, not supplement. Yes, the supplementary pay and things like that. We have an issue, our financial services people do, with getting it into the correct month. So when you say you were backing it out, how does it end up in the right month for HMRC?
Yes. So do you want to come back in on that?
Yes. So we, in addition to SBS, we use a system called ClickView, which is our reporting tool. And because we have control of that, we can close that on working day 1, and we can release that to our budget holders. But SBS and our live version of ClickView, which finance have access to, remains open until hard close on working day 7. So from what we're reporting externally, the payroll falls in the correct place, but for our budget holders, we cut that off on working day 1. And again, we don't see any significant moves. I think our supplementary pay is normally about 30k. It's really not significant for us.
Yeah, so ours isn't large either, but it's been put as a block to working day 1 because we can't do anything until, to get this in the right place. So thank you. Yeah.
And Jim, thank you for raising it, because actually this is a really, really good example, isn't it, of where people think that you can't get to put day 1 because of some you said this is a block in your case. So, but what I think Jess is describing is a position where this is absolutely not material at all to the position, and it's not detrimental to us getting the key messages out for people to take actions on their financial position and so on. So, but still reporting the statutory position in line with the key time stamp. So that's a really good question. Thank you. Stephen Simmons. Stephen, do you want to come in?
Yeah, just to follow up on what Jim was saying and Jessica's explanation, I think if I understood it right, what you're saying is the internal reporting may not always be the same as the external reporting. And if that's my understanding, if that's correct, how does that fit with the auditors, even if it's not material because it's not the same? Because we have examples of hospitals recently where the board report, if it doesn't tie back to the ledger, is a big no-no, because there's all sorts of potential, at least, and potential theoretical risk for it to be different. And how does that tie back when we've got the latest HFMA checklist that we're filling in? Are you disclosing that they're different?
Jess, you might want to come in. Shall I just have a first go at that? Because year end is going to be spot on, right? Year end is going to be, because you take the extra bit of time. So what we report to budget holders on day 1 is exactly the same as what we report to our board at the end of the month. Our board timetable hasn't changed, and it's exactly the same as we report externally to NHSINE or NHSE, sorry, now every single month. So that doesn't change at all. That's all based on the month, on the day 1 position. I think what Jess was describing was for in that case, in this specific example, it was like HMRC type stuff. But at year end, it's exactly the same number anyway, because you've taken that extra bit of time. But Jess, did you want to just come in and embellish that? Because there's a really valid question, Steve.
Yeah, so what we are reporting, our bottom line is exactly the same. And it's really a handful of changes made at cost centre level that we have put provision for centrally. And then we will show that in the correct place. And that's what we will report the following month internally. So we are reporting the same numbers. But we have, when a supplementary pay comes in, we have to reflect that in the ledger in the same month. We can't delay it, even though we put provision in. So it's a timing difference of about a day. And like Mark said, at year end and then also at month 9 close down, they are spot on because we have extended close downs.
Thanks, Jessica. If I can just feedback, then that's really powerful, because it takes what might be a concern of, we couldn't do it because, and turns it around to you can do it, there are ways to do it, and here's how you go about doing it, and it's not done at month 9, month 12. So statutory, it's the same. Thank you.
No, I've loved your question, Steve, and I love Jim's question earlier on because they unpack some of the myths around this. So, and month 9, of course, is convenient because month 9 is is after the. And it sounds like Leeds and Portsmouth are doing exactly the same, where we're effectively taking a little bit longer because of the Christmas break. It just happens this month 9 also, which gives you the extra accuracy for the month 9 position. So, so yeah, really helpful level of questioning we're getting into. So thank you. This is. We're gonna have to, Megan, we're gonna have to try and write some of these myth busting stuff up that we're capturing here because it's really good. And we come back to we've still got. I'm gonna just keep going because there are questions in the chat still I haven't got to, if that's okay. So sorry, Liz, I'm not letting you off the hook yet. Where do I go next? Oh, somebody's asked Jess for your contact details. I'm sure you'll be happy to provide your email address. Cool. Right, where do we go next? Right, Andrew Ricks. Michael Shaw spoke about income received after accounts payable, after accounts receivable closed down, not affecting I&E because it's allocated to invoices, which I understand. But what about income that isn't allocated to invoice but credited directly to cost centres? Which months would this be reported in? Andrew? Sorry, Michael?
Yeah, so the period is what we call closed pending to stop anything that we don't know going into I&E. Anything that does affect I&E, or like what we would call a miscellaneous receipt, will go into the following period. Then if financial management want to accrue for it, they can. But they're already working on finalising their position, so we don't want to be putting anything in that they're not aware of.
Okay, hopefully that answers. Thank you. Right, next one. Next one's an interesting one. So it's probably for Jess. I'm going to bring you in on this as well, if that's all right. But let's go with Leeds first. So because actually the question is for both for. It says, would it be possible? So this is Joanna Wickets from South Warwickshire, I think. Would it be possible to have an idea of team sizes for both organisations? Because this just gives a bit of context when they look at the process. Now I think it's fair to say we are talking about two very large organisations here, Leeds and Portsmouth. But there are smaller organisations like the Isle of Wight Trust, for example, which is very small. There's just gone Working Day 1 as well. But this answers the question. So Leeds first, and then Portsmouth. Just rough size of the sort of financial accounting team that's dealing with these processes. Leeds.
I was going to say, from the management accounts, we have probably just around about 50 individuals. I would say probably in total across sort of the finance, about 150, Tony, would you say?
Well, yeah, all our services are in-house, so 150 includes payroll, AP, AR, cashiers. So Mike said there's about 50 on the financial management side involved in this, and maybe 10 on the financial accounting, capital and FSO side.
Yeah, okay, fair enough. And but so you're running an in-house environment there. Portsmouth is probably the other end of the spectrum with a significantly outsourced environment, which is where we're going to get to SBS in a minute. So to Jess.
Yeah, so we're about half the size of Leeds. I think our finance teams, there's about 60 of us. About 20 or so of that is management accounts.
Perfect. So hopefully Joanna gives you a bit of feel. But as I say, the Isle of Wight Trust, which is probably one of the smallest trusts in the country, actually, has just gone Working Day 1. Well, they've done it for about the last 4 or 5 months. And the next question is from Sean Wayman, South Tyneside and Sunderland FT. Do you have a group structure? And if so, does consolidation create any challenges? With Portsmouth are just about to enter into a group arrangement with the Isle of Wight Trust. So it's helpful they've gone Working Day 1 already. But that's not the question you're asking, Sean. Is asking the question to Leeds. Do you have a group structure, and so does that cause any consolidation issues?
No and no.
Okay.
Our charity's totally independent, and we don't have a subsidiary.
And actually, you mentioned the charity, Jess. I don't think we do. Are we doing Working Day 1 on the charity accounts now? Remind me.
No, not for charity.
Okay, didn't think so. Yeah. Okay. I think we've answered Joanna's second. The next question: does accounts payable and accounts receivable close later at year end? I think we've already said we keep those processes open. Yeah, a bit later. Cool. There we go. What level of? Right. Okay. Good one. Laura Box, Wirral University Teaching Trust, asking a question of Leeds again. So, what level of detail do you report clinical income on at Working Day 1? I.e., is everything to plan and then adjusted for variable elements like drugs and devices later, or do you provide estimated levels based on the estimated level of activity based on points of delivery and specialty level. So real good question around the timing of you getting income information to be able to put into work on day one. Good question.
Yeah, so for clinical income and working day one, we'd basically go back to plan or it's more the forecast really of what we're expect to receive. And then the kind of the variable elements, as you mentioned, around drugs, devices. We also we monitor kind of the ERF position separately, but that's done kind of a month in arrears. And we also produce like an early activity report for the month that's kind of not being completed. So it's just being completed, but we've not got the full data because we've not got the fully coded spells and everything. But that's not done at a price level. It's more kind of a review of the activity position more than anything.
Yeah, that's really good. All right, thank you. And I'll just give the Portsmouth position on the ERF bit as well, because we have an estimate on working day one that we put into the position, obviously, and then the following month we'll have better information on the previous month, and it just gets sort of tidied as you go along. But again, never material. So, right, I think I've covered off most of the questions in the chat box. I've probably not covered every single one, but I think I've covered the themes. So, just before I thank Leeds, is there anybody else that's got any? Have I missed a question in the chat box, or did anybody else want to put their hands up on the Leeds story so far, which was amazingly helpful? Thank you. Oh, Sean, come on in.
So yeah, if you don't mind just asking, just in terms of the early closure of accounts payable and accounts receivable, is the ultimate impact on that effectively an increase in the number of items you put on your bank rec? Is that how it all feeds through? Because just in terms of payment runs being done and things moving into different periods.
For bank purposes, no. We tend to do the last payment run on the day we close AP, and then we don't do any AP payments for 5 days until we reopen again. And as Mike Shaw said when he was going through the systems bit, AR, we keep it open to receive cash, so that we have an accurate cash figure at the end of the month.
Okay, and I presume you have to be quite careful how you then manage your better payment practice as a result of that close down for the week as well. Did you find that was an impact? Did you find that had an impact on your better
payment practice? We do a payment run normally right on the day we close down to get rid of all the main things. So we're only talking 5 days without payment run. So and with just to elaborate on a bit on what Tony was saying with the cash book reconciliation, you will find that there might be 5 days difference between what the bank statement says and what's in the accounts, but it's not material. You just have to make a note of that on your reconciliation.
Thank you.
Perfect, thank you for that. Good question. And John, I know we'll probably make this the last question before we move the session on. So John, you got a question for the team?
Thank you. Yes, just a short one, I think, Mark. How soon can you reopen the ledger to get these corrective actions done?
Because we're on an EP, we control our own ledger, so we open it as we need to. So if we identify something at the day one review meeting at 9 o'clock that needs adjusting, we will put the adjustment through and it'll be in by 4 o'clock. That's how we meet the direction.
Yeah. Okay. Yeah, I'm happy with that. It's just for the next period. I mean, because you don't want any journals going through to mess these figures up, do you?
Mike, we can't post retrospective journals, can we?
No.
I mean, it usually takes us about 2 weeks to get the ledger open again. And I just wondered if you guys have got it shorter.
So I'm assuming you mean once we've finalised the position of a thing and we've opened the next period, going back and posting something in a prior period. We wouldn't generally do that, but we could technically.
No, not prior periods. I just want to move into the next period. You know, you're reporting on month 8. When can you start doing the journals for month 9?
Well, you can start. They won't post into the ledger until working day 2. You can carry on doing the journals, but you won't see them in your GL until working day 2, because we don't. You can potentially open it earlier, but we don't like to, because our system automatically reverses all the accruals, prior month accruals. So when we open the next period, it will reverse all the accruals. So if somebody goes in and does another accrual, we will have to manually reverse it. So technically, like Tony was saying, we can open and close the periods whenever we want. We just choose not to.
Okay, thank you.
Thanks, John. Laurie, put your hand up and down. Did you want to come in at all?
So I work with John at Sheffield Children's, and why that's one of the reasons I was so instrumental to try and support getting this off the ground, because actually at Sheffield Children's we've got a huge opportunity to do things quicker. And so where John's coming from is we might report on day 6, but actually culturally we work with Sheffield Teaching and we don't roll the ledger over in a particularly timely way. So there is a bit of a kind of vacuum between us finishing and rolling over into the next period. So all of this content is hugely helpful for us to go back and work with our we have a bit of a shared services with Sheffield Teaching. So that's kind of context to John's question. And yes, John, I concur with everything you've said, and we'll get slicker.
Excellent, thank you, and thanks Laura, thanks John, and a number of colleagues from Sheffield Children's actually asking questions. Thank you. Right, now listen, we are at the time for the lead session. That was a fantastically engaging session. It was a brilliantly detailed session, but also you can tell by the half an hour worth of questions we had there right up to the end. So you can see the level of engagement you've got to there, and the level of detail we got into. I think particularly on some of those questions around some of the myth busting stuff, exceptional to get into that. So Leeds team, thank you so much. Brilliant for all you're doing. Thank you for keep on showcasing it, because the fact that you keep sharing this stuff and demystifying some of this stuff helps others to jump on the bandwagon as well. And I know Portsmouth, you know, we spent a lot of time with the Leeds team before we committed to go and work on day 1. So we learned from you as well. And so thank you very much. Really, really appreciate it. Thank you. And we've still got, I think, 140 odd people on the course. So this is one of the most engaging sessions I think I've been party to. So if all of you are coming to the HMA conference, or some of you are coming to the HMA conference in December, when I'm on stage asking Stephen Bartlett from Dragon's Den questions on the Friday session, if you're this engaging to my questions, then I won't have a hard job at all managing that conversation. So thank you. And so there's a little hint there to help me out on that session. Listen, right, I'm going to introduce Jess now. We've got together until 4:15. We don't need to spend till 4:15, but we will, I should have said at the start, we will make sure that we stop at 4:15 as a hard stop wherever we get to next, to ensure that people have either that's the end of the day and the end of the week, or they've got a break before the next session, because that's what we've planned into people's diaries. So 4:15 is what we're heading for. If we finish earlier, we finish earlier, but we won't go beyond that. So Jess, Jess, a colleague of mine, Jess, a brilliant colleague of mine. Just maybe laugh, Jess, when you put in your in the chat box your email address, Jessica Welch 2@Portsmouth. I'm not sure if I've met another Jessica Welch, but I know this one's unique. Jess, absolutely amazing. Key part of our working day 1 process, key part of our working day 1 shutdown process. And Jess is going to get us into the specific bits around SBS, or to be honest, managing on an outsourced system, but in our case, SBS. So Jess, with that introduction, perhaps over to you. I'll do exactly the same. I'll keep my eye on the chat box. Anybody wants to put their hand up as we go through, exactly the same, just chip in. I'm sure Jess will be happy with that. Otherwise, we'll do a Q&A at the end of the session as well. So Jess, over to you.
Thank you, Mark. I'll just share my screen because I've got a few slides to go through. Some of the items that I've covered on my slides, we've already covered in our Q&A. So I'll try. I might skip over a few bits. Can everyone see my slides? Has that appeared?
Yes, thank you.
Yes, okay. So I'm Jess Welch. I'm the head of management accounts here at PHU. And I have been in this role for the last 18 months. So I've been asked to speak to everybody about the differences between our outsourced and insourced financial ledger and financial services. So you've heard from Leeds sharing experience on day 1 reporting, having had an in-source ledger. And I'm just here to describe how that differs for us at PHU. So a bit about, just to set the scene, I'll start by describing a bit about PHU. Some of this has come up in the questions already today. So PHU was formed on the 1st of April 1993 and achieved University Hospital status from the 1st of July 2020. with a turnover of about 0.7 billion and have about 8,000 staff. We're split up into 4 clinical divisions, corporate services and commercial services. We've had a PFI contract since 2009. We've got a brilliant regional renal specialist service and a large pharmaceutical distribution hub. Looking at our finance function, so our substantive team is about 60 staff, led by the Director of Finance and reporting to CFO. We cover commissioning income, divisional management accounts, financial systems, costing, planning and overseas visitors. Our accounts payable, accounts receivable, payroll and ledger management is all outsourced to a third-party supplier, and that has since 2006, and that's SBS, which I'm sure many of you also use SBS. And prior to working day 1 reporting, we delivered our reports from between working day 6 to working day 11. So how did working day 1 change the way the finance team worked over close down? About 2 years ago, we were tasked with moving to working day 1 reporting. We first attempted it for month 1 in 2021, and to be honest, we haven't really looked back. Our financial reporting moved from working day 6 to working day 1, so shifted by about 5 days, 4 to 5 days. Our system generated purchase orders and registered invoice accruals feed into a ledger overnight on working day -1. We have found that we have a reduced validation and interpretation time, and that was really probably the biggest change for the team to get used to. We do final checks and a few journals we post up to 10 AM on working day 1. The preparation of our reporting covering income and expenditure, activity estimates, capital and cash are all done by 1 PM on working day 1. And we review our working day 1 report with the senior finance team at 2:30 PM. So that's including Mark, our CFO. And then we publish our budget statements at 5 PM alongside more targeted reports to divisions and the trust leadership team. So specifically working with an outsourced financial services and ledger, our accounts payable, accounts receivable and payroll services all contracted through commercial suppliers, I mentioned earlier. That's had a proven track record for over 15 years. Our transactions are scheduled and managed through a contract which was set up before working day 1 reporting was ever considered. Our ledger soft close is on the last working day of each month, and the ledger hard close is on working day 7. And they manage our PO receipting and non-PO accruals. Closing transactions are posted to the ledger on the last working day each month. So working day -1, but we can usually see them in the evening. However, in practical terms for most of the team, when we turn up to work on day 1, there's literally thousands of transactions, both GRNI and non-PO, that have been processed overnight. And we only give the team until 10 AM to review all of those and to make any adjustments to the ledger. So really we only have a couple of hours in the morning to analyse all of this data, which sounds pretty scary, but in reality, it's not really proved to be a limiting factor for us. We try to track this information in the days prior to day 1. So although it doesn't, our GRNI and non-PO doesn't physically hit the ledger until the evening of day -1 or the morning of day 1, we use transactional reports and BI to aid close down and to review many of these transactions in advance, so they're not a surprise to us. We also use additional reporting dashboards. So for us, we use ClickView, which updates every 30 minutes or so. So it's very much a live system, really similar to BI near real time. And that aids us to make really fast-paced decisions. And then, as we discussed in the questions earlier, we have some feeders that are available after day 1. So pay files or supply chain interface, and for those we put in a provision. And if it's something that we have to release into the position, we will then reversed out our provision to match the value of the feeder file. And then as any time of whether you did working day 6 or working day 1, there's always a potential risk in terms of system availability. So that's just something I think all of us have to manage. So looking specifically at pay, by working day -2, our monthly payroll feeder is processed. And typically all weekly payroll feeders have been processed. We would have processed our bank and agency charges, and there are very few estimates that we have to make. Typically this is less than 1% of the expected final charges. So potentially between working day 2 to working day 4, we might have one weekly payroll that gets processed. This isn't every month, it really depends on the timetable. And there's usually a supplementary pay file, but it's not material. And we will just contract any transactions processed after working day 1 by reversing an estimate before the ledger closes on working day 7. And then as I mentioned earlier, also we use the ClickView. Using ClickView means that we can publish our reports to budget managers, and that is a fixed position, and then finance work off a more live ledger system. As the position could continue to move up until working day 7, but we make sure that our bottom line stays the same as what we've agreed on working day 1. So moving on to risks, what do we face each month? So people, that was one of the questions. We're reliant on the availability of key individuals or knowledge within a more constrained timetable. For us, that just means making sure that we have cross cover amongst the team. And that was really tested during when COVID was more prevalent and we had quite a number of people off sick. But we were tested on that. Processing, so the availability of some of the information at the time that we needed. We don't receive any preferential treatment from SBS, but we are fortunate that SBS's own internal processes tend to deliver ahead of our contractual schedule. But we are very aware that if they ran closer to their limits each month, then that would really test our ability to achieve day 1 reporting. So if we received our payroll files later, that would give our teams less time to manage that. And I think we would maybe have to review our timetable. There's always the risk of system failure. So if our ClickView goes down, then, which it has done, then we default to BI near real time. If SBS goes down, that's really out of our control, and we would probably not be able to achieve working day 1. And we would have to delay it because we wouldn't have any visibility of the data. Fortunately, that has never happened, so I hope it never does. So we're 18 months down the line now on working day 1, and to be honest, we are still facing challenges each month, and there's usually something new that comes up that we haven't experienced before. And our team is really brilliant at coming together and brainstorming to make sure that we have managed to achieve working day 1 every single time. So a key learning for us was around communication. Close down for us is really fast paced, and we have found it specifically for the management accounts team. We now have everyone on site for day -1 and day 1. Nobody is remote on those days unless they are ill. And then we also have key members from our other finance teams on site too. And we've found that really instrumental in making sure that we can make decisions at a fast pace. And then after each month end, we will come together as a team and review what challenges we face and kind of put a plan together on how we can mitigate those going forward. But that we're still experiencing, this is still a learning curve for us, and we're trying to improve it every month. That's it from me, but I'm happy to answer any questions from anyone.
Thank you, Jess. And once again, we've got questions, so I'll help navigate those if that's okay. Do you want to pull the slide down? Is that okay?
Oh, yeah.
just on that last bit, Jess, I've just to before I get to the questions, that last bit just struck me a bit. It was probably worth exploring a bit more, isn't it? You said on working day one, we have the core team physically on site. Yeah, and that's the first thing. And the second thing you said, which are both related points, I think, is the wash up session and the learning curve still going through, even 18, 19 months, whatever it is on, and that sort of learning session after working day one every single month. So those two things. Just want to comment on how, and I'm kind of I'm sat across the site, it's slightly remote from the finance team. Okay, so this is for you to comment on, not me, but I'm getting a sense of that builds its own degree of momentum and morale and team ethos across the team. But am I right? And if so, do you want to comment on that?
In terms of being on site?
Oh, well, in terms of the cohesiveness of the team working together, being on site for working day one physically, unless somebody's got COVID lateral flow positive, yeah. In which case they can stay away. And then the bit about coming together for the wash up as well.
So for us, and I think for many people facing this, working day one was a huge cultural change for us. Like we'd done working day 5 for years. That's all I'd ever known, certainly. But I've never ever heard somebody in the team say that's not possible, we can't do that. Literally the whole team is really motivated to achieve working day one, and some months, if I'm honest, it's felt like it's almost been unachievable, and we've really been on a knife edge as to whether we have been able to achieve it. But every single time the whole team has pulled together to find a solution for any problem that we faced. And it's probably only in the last few months that we've agreed that the whole management accounts team will be on site on those days. And we've just found, and that wasn't a top-down decision, that was really everybody saying, this is what works for us. We all need to be here to be able to communicate so nobody misses out on a key message. Often we're just having live conversations in the office. So rather than having to then relay that to someone at home who might miss something, that's really what we found has worked for us. But yeah, that's definitely something that nobody has complained about it at all. In fact, I would say that the team have been a driver in getting us to that point.
Thank you, Jess. Okay, listen, there's a few questions. I'm going to just cycle through those with you, if that's okay. We've got bags of time, folks. So I know people will be particularly interested from this session in the specific bits around working with SBS or working with an outsourced ledger. I'm going to deal with the questions in the chat so far, but again, feel free to pop your hands up, pop more questions in the chat. First one from Stephen Simmons. I think you've already dealt with, Jess, to be fair, because after Stephen put the question in the chat, I think you by accident or design or not, you covered it. It says interested. Oh, hang on, that's the wrong one. Hold on, I'm confusing myself now. Oh, no. So Stephen said, actually, no, Stephen had a comment which was, and I guess this could apply to Leeds and to Portsmouth. It says interesting to note that it's just a comment, not a question. I think interesting to note the tempo and precise planning in place. We're not planning by the day, but we're planning by the hour, and I think that's fair. Yeah, I can see Leeds, Town, Portsmouth, and everyone else nodding there. So I think that's. I mean, I described earlier on industrializing the process, and I think that's been borne out by the two presentations. Yeah, the next one you've already addressed, which is the one about how to deal with system unavailability, but you definitely dealt with that. And you answered it really honestly as well in terms of, we've had some scary times, never yet failed to deliver on working day one. And I suppose, can I just say from a CFO perspective there, because Jess was really honest there and said, there's been some scary times, things have gone down, challenged us, whatever else, but we've never failed to do it. Great. The first thing, I've never really witnessed that, because by the time I get on the 2:30 CFO sign-off call, so it's normally already been dealt with. So thank you, Jess, for protecting me from some of that. But in reality, though, if we ever did face anything that was insurmountable, then without any shadow of a doubt, a CFO will be taking a decision. We extend by 24 hours or 48 hours or whatever, or 72 hours, whatever it is, because there's the only people that's holding us to this timeline is ourselves, really. Our external reporting timeline and our board reporting timeline, and that is different, isn't it? So, but Jess, that's really helpfully said that. Actually, can I just say, just on that bit about the unavailability and so on as well, Jess, I mean, even this month, when we go back to, what we are now, the 18th, we go back to just over 2 weeks ago, when we did the day one for month 7, was it? Yeah, must be. Do you remember we had a bit of an issue around, we had a bit of an issue. We had a bit of an issue that was a judgment issue that could have required us to take a bit more time over that, to be fair. And I do remember actually in that conversation saying, do we want to give ourselves an extra 24 hours on this? And within 10 minutes we decided no, we made a judgment on it, we moved on. But you know, that is always an option, I suppose, what I'm saying, if the system goes down or if it's an issue that's impossible to deal with. Right, next question is from Laura Moody. Laura says, Jess, how do you manage if the entries which hit over the soft close differ from what you expected? Do you ask budget managers to stop receipting or coding non-purchase order invoices by a set date, for example, by working day -3 to avoid this and prevent you having to reverse or correct accruals, which you'll be posting before day 1? Did I read that out correctly? Did it make sense, that, Laura? Sorry, Jess.
Yeah, no, that makes sense to me. So we're with SBS, so we can't physically stop people receipting. They can receipt up to, I think, about 6 PM on day -1. I think that's about right. We will send out email reminders asking people to receipt earlier, reminding them. But in reality, late receipts do happen. We try to mitigate this by just keeping an eye on, there's certain large invoices that we know come in monthly, and we will keep an eye on those people's workflows and might code things ourselves to make sure that they come up in our reports that we run in advance. But things do appear on day 1 that we're not expecting, and that's where we have the 2 hours for our team to make any adjustments. We try and look at materiality level, so nothing too small. If it's small, we will let it go and it will be wrong for that month. But key issues we will fix, and we set the deadline of 10 AM on working day 1 to fix anything that came through unexpectedly.
Okay, thanks, Jess. Really helpful. Thanks, and thanks, Laura, for the question. Now, I think we've run out of questions in the chat, I think. So I'm going to go to the floor and say, anybody got anything? Oh, there's another one come in, just to say that. But I'm going to just before I go to that, questions just come in. Anybody got any questions? Keep them coming in, either in the chat or pop your hand up. Listen, if we ran out of steam earlier, that's no problem. We'll all get some time back. Jess was really helpful, helping to draw some parallels with the Leeds questions earlier on anyway. So we might get to a natural position. But Adrian from Sheffield again has just asked a question. Did you have any team members who were not sold? Oh, good question. Good question. Did you have any team members that were not sold on the project? If so, how did you bring them on board? So take ourselves right back, Jess, to before April 2021, probably, you know, the December, January before. We both remember those times. We both remember those individuals, you know, in the team and so on. Yeah, talk us through that, Jess.
It was a little while ago to try and remember. I think most people were a little bit dubious about it, and I probably might put myself in that category to say, oh my goodness, how would we ever achieve this in reality? But we just worked through it so we took our timetable, so similar to how Lee's described, we took our timetable in a really granular level on how we're achieving working day 5. We looked at at a transactional level, we looked at each item in turn, and we openly discussed as a whole team how we would achieve that. So we brought everyone with us. So it wasn't really about having to specifically bring people on board. We just included everyone, the whole journey. This wasn't a top-down the initial ask was a top-down directive, but achieving it was, I would say, probably more bottom-up, because it is more of the team who know exactly how things work at that detailed level, and therefore we were reliant on the whole team to help us achieve that. I don't remember anybody, as I said earlier, I don't remember anybody saying that's not achievable at all. I think everybody really just worked well together to find a solution for every problem, and I think it came to a point where we just had to do it. And I think that first month we didn't do a dual running, we just jumped in and did our first month.
Yeah, no, and thanks, Jess. I remember yourself, I remember Steve Smith was also presenting on this topic for us, Portsmouth, and others being healthy skeptics, I suppose, and I think that's what you want actually in the team, because that's how you work through the issues. So so I don't think anybody was sort of, you know, bringing the banners and the balloons out around this. You know, it was about making sure we did it in a calm, collective way, and it took many months, wasn't it, Jess, of having the confidence to go live when we did. So so thanks, really good question. Right, Madoop from Barkins asked how many team members are directly involved in the ledger postings, so posting of journals and corrections.
The whole on working day one, that would be the whole management accounts team. So actually physically posting about maybe 10 to 15 of them, but that's quite a carefully managed process. So it's not a free for all. Everyone can just post whatever they want. With those proposals we put forward by our senior management accountants, and they would be reviewed by myself and the assistant director of finance.
Perfect. Okay, good. Madoop, do you want to come in and clarify that at all in terms of, or does that answer your question?
Yeah, that sort of answers it. I just was asking because I work in a team of 4, and we're mainly responsible for posting the journals and stuff like that. So I just wanted an idea of the scale and the differences.
Okay, cool. Thank you for your question. Thanks for coming in also. Right, Karen asked another question. So Carol Marcia from C&W Partnership Trust for both trusts. So this is for Leeds and Portsmouth. So this time I'll go Portsmouth first, and then I'll ask Leeds to come in as well. For both trusts, this killer question. This killer question might be the one to sum up on. For both trusts, what would you identify as a couple of perceived key barriers to implementation? How would you overcome these? So for both trusts, what would you identify as a couple of key perceived barriers to implementation, and how you overcome these? So Jess.
I'm trying to think back, and I think one of our our major issues that we were concerned about was our payroll. Actually, no, I'll change that answer. It was dealing with the non-PO and GR&I that gets posted on day one. So we using SBS, we have no control over that. We can't post it any earlier. That is literally for us thousands of transactions that don't get seen by the team until day one. So that was overcome by using the transactional reports that we can put out of BI and trying to review as many of those transactions as possible in advance of day one. So that's quite there's quite a lot of detail that goes into that. And like someone else asked earlier, there are still things that we can't fully review in advance of that, because budget managers can approve invoices right up until last minute on day -1. So that's probably the biggest thing we've had to overcome, but the team have got really, really good at trying to use as many of the tools available from BI that we can, and to simulate those reports in advance.
Thanks, Jess. Just before I hand over to Leeds for this one, was there an issue I recall around pharmacy as well, or pharmacy drugs or something? Am I misremembering? Was there an issue we had to overcome in terms of feeder information?
Yes. So we've worked with the pharmacy team to get a report 4 days. I believe it's 4 days earlier than we would have done previously, and we estimate the last 4 days of the month for our pharmacy, except in month 9 and month 12. So that was also, because for us that's quite that's probably our second largest expense that we face after payroll. So the income team did a really good job of trying to, so it's not a simple accrual that we do. It's not just a straight 4 days. They've really looked into our spending trends depending on the month of the year, the day of the week, to try and make that as accurate as possible.
Yeah, I just remember that from the pre-go live. So in the months I just remember as being, as you said, probably the second most important issue after payroll in terms of getting right. So yeah, thanks, Jess, really helpful. Right, the Leeds team, same question. Any issues, a couple of barriers, perceived barriers, at least to implementation, how you overcome them?
Good question. Casting my mind back. I think we had difficulties with some of our the pharmacy and some of the just being able to get the reports, but absolutely credit to our pharmacy and system team that helped us overcome that. I think it's cynicism a little bit that we are a large trust, number of complexity, number of feeders, etc. That we wouldn't be able to do it. I think what was key to overcoming some of the perhaps doubters within the team was very much sort of the leadership from our director of finance, and being able to present to him on a fortnightly basis any issues and how we would sort of and proposals how we would overcome it. Tony, I don't know if anybody else has any thoughts at the time.
So as Mike said, yeah, we thought initially, oh, this works at Bolton, it'll never work for us. So we actually, a number of us went across to Bolton to see how it was done, and so we could bring back first-hand experience. Bolton came across and helped us over here and spoke to our teams. We got everyone involved, so we had a load of little subgroups that, as we said earlier, so AP, AR, cash, management accounts, pharmacy, estates, all part of the process. We had full buy-in from the director of finance and from the exec, so the chief exec actually made a big publication about it when we first did it, so everyone felt great about that. And the other question got raised before we went on to it was the degree of accuracy. So the first time we did it, as Mike said in the presentation, we actually ran what the actual position at day 6 would look like compared to what we reported at day 1, and the difference was £38,000. And our monthly turnover here is 150 million quid, so that was literally petty cash. And I think that sort of just totally dealt with this whole myth around accuracy and making numbers up and its estimates in a stroke, really.
Thanks, Tony. Thanks, Mike, from the Leeds team. Excellent. Thank you very much. Hope that answers the question. Right, got quite a few more questions pop in there, Jess. So I'm going to come back to you now, Jess. Right, John Oliver from the Royal Orthopaedic Hospital asks, and this again, good question. So, Jess, can I ask which figures are being used to populate the monthly PFR return, day 1 or day 7?
I believe it is day 7, but I might have to clarify that with the colleague.
But can I just clarify, because
Yeah.
I think you're right as well. But you also said earlier on that in any adjustments made after day 1 report to budget holders, you're effectively adjusting, making adjustments that don't affect the bottom line. So you're adjusting out provisions and so on, and effectively making contra adjustments, aren't you? Because nothing you're doing is actually material to the bottom line. So you don't adjust the bottom line. It's the movements on individual cost centres that that may be some subtle changes. Is that fair?
Yes, it is really subtle, and any provisions we make will be in the same spend type. So yeah, it's probably one and the same for the PFR return.
Yeah. Thank you. Right. There's another good question here from Jonathan Rutter at Blackpool Teaching Trust. God, we've got a good spread of trusts on the call here as well. Really good, really amazing, fantastic. Right. When you move from working day X, workday 6 or whatever it was, to working day 1, did you move in one big bang or intermittently via a staged approach? Now, Jess, I think in our case it was one big bang, wasn't it? And I seem to remember we discussed the option of like going to day 3 or something, and it was like, why on earth would you do that? Because you're going to re-engineer your processes. You kind of do it once. But Jess, do you want to? I might ask the Leeds team this as well to see if it's the same experience. I think it probably was. But Jess first. So did we? So we did move in a big. We did move in a big bang. It wasn't intermittent, was it? But do you want to give any more insight into that?
No, we decided to just go for it basically, and we didn't do a draw run either. I think it was decided that we wouldn't really gain anything by doing it intermittently, and that you almost just have to jump into it and sink or swim. But there was a lot of planning that went in behind it. So I think we were confident that we could just go for it.
Yeah, just remind us how many months of planning went in just before from the conception to delivery.
I believe it was about 6 months.
was going to say it was, and in proper detail for probably 4 of those from the sort of December through to we went live in April. And I think the extra couple of months was probably the more concept stage, but the proper planning was probably a good 4 months or so, wasn't it? Leeds was a big bang approach to Leeds as well.
Yeah, yes, it was. It was. We went from day 6 to day 1 in one go, and we started talking about it in July, and we went live on the 1st of November.
Yeah,
I think we did one practice month, or we practiced closing sub-ledgers early. Is that right, Mike?
Yes, that's my sort of reflection. Yeah, 6-month period sounds very similar to yourself, really, and just went with it, really.
Yeah. Okay. Yeah. And I remember with Portsmouth's story, we particularly wanted to start the new financial year like this. But actually, when I keep on saying April 2021, actually, what I mean is the 1st of May. And it wasn't the 1st of May. Do you remember, Jess? Because it was the bank holiday weekend, and it was at the 4th of May. And because I remember Star Wars, May the 4th be with you. I remember. It was, wasn't it? It was so actually.
I think you have a really good memory.
Well, yeah, there you go. Right. Where we go next? Maria Miller. Mid. Is this work? Hopefully this is working for everyone. I'm really enjoying this session. Right. Mid and South Essex Trust. Marie Miller. Jessica, she says, when you refer to BI, which team is that? So obviously, Jessica will come in and clarify that. Is that within finance, or is that an arm of SBS? So BI, what's BI, Jess?
That is the reporting dashboard that we use within SBS. So it's not part of our finance team. It's our reporting tool.
Is it? What does it stand for again? It's business
intelligence.
That's the one. Yeah. Sorry, yeah, but it's a reporting tool. I meant it's not.
Yes.
But yeah, there's the reporting tool's called business intelligence. Yeah. Marie, hopefully that answers the question. Come back if not. Right. Oh, you've already answered it. If I went down to the next bit of the chat, Jess, you already answered that. Sorry. Right. Laura has the question. You answered any more of these questions, Jeff? Right. You report on day 1. Could you please clarify what type of ledger movements, if any, still go through after working day 1? I think I might mention this a few times, but let's clarify this. You mentioned reversing provisions, etc. So, Jess.
So every month I think we have the supplementary pay run, and some months we have 1 week of our weekly payroll, and I think that's the only 2 that we see go through on a regular basis.
Good. Now the next question I know is for Leeds, because the next question is from Jim Mays, and he says, was the £38,000 difference all in one cost centre? And that, of course, is referring back to the comment we just had about in the first month of Leeds going live. They also did it work day 1, did it work in day 6. The difference was 38k, not material. But was that 38k is a big movement in one little place of the, one person's budget statement moved by 38k, or was that an aggregate of movements up and down? I suspect it was the latter, but go on.
It was still, we're not that good at Leeds. It was, I'm sure there was a few 100,000 swings, say on drugs, on payroll, and I think Tony was just referring to the net impact across. But yeah, usually you get something that compensates the other way, don't you? These things.
Okay, cool.
There's the bottom line.
There's the net impact, yeah. You didn't have multi-million swinging either way, did you? There
wasn't no, it wasn't that.
All right, good. Right, let's keep going. Emily Wood, Torbay, we've got somebody from the southwest. Excellent. Hi, Emily. Right. Do you standardise a lot of your accruals based on an average, or is it a case of, this is for Jess again, do you standardise a lot of your accruals based on average, or is it a case of looking into the ledger invoices received, for example, utility bills? So, Jess, do you want to unpack that for Emily?
I would say the latter, that most of our accruals are based on the most recent data that we have available. So the team will very much be looking in the ledger for the most recent invoices that we have, or using reports that we receive from external parties.
That goes to the accuracy point again, isn't it? It's the individual management accounts, so looking after the individual areas, making the best possible judgment based on their area of expertise. So thank you, Jess. See, Mr. Smith has popped in. So Steve Smith has popped in. So Steve, didn't realise you were with us this afternoon. So yeah, PFR returns based on working day 7. Thank you, Steve. Good to have you on the call. Right, Patrick O'Brien, how many days does the financial management team spend making changes after the monthly position? So the monthly position after working day 1, are they just minimal changes, or do the management accountants update the detail of their positions? Jess?
After 10 a.m. on working day 1, they don't make any further changes to that current month unless it's something that we've agreed later on in the day at the day 1 meeting. The only exception to that is anything, so the supplementary payroll or weekly payroll that we just have to make an adjustment for in the ledger. But that's it. The divisional management accounts teams don't make any changes.
Perfect. Yeah, thought so. Right. James Gleeson from Queen Victoria Hospital. I love Queen Victoria Hospital, just down the road from us. He says, do you have a contact in the Isle of Wight that we could chat with? We're a tiny trust, one of the very smallest, so probably benefit from a talk with the Isle of Wight. Yes. Now, Jess or Steve, do you mind popping the email address in the chat for Joe Gooch on the Isle of Wight if you get a chance? Otherwise, I'll do it at the end, but we'll definitely do that for you, James. No problem at all. Then we've got Karen. Actually, Jess, don't worry, you just carry on focusing on answering the questions. Steve can do that, or I'll do that in a minute, James. Right. We're nearly at the end of the questions, I think. Karen Towes from Humber Teaching Trust has also asked a question. Do you have to set up your own reports on the business intelligence BI system, or use reports already on the dashboard, Jess?
That's a really good question. So if you're familiar with SBS and the transactional reports, we refer to them as the A reports. So those transactional ones that are already set up. I believe they are standard, but I can definitely check with my team to make sure whether they've adjusted them in any way. So perhaps can I come back to you on that one?
No problem at all. Now, I can't multitask, so I'm now typing Joe Gooch's email address from the Isle of Wight into the chat box. I hope she doesn't mind. I'm sure she won't mind. Right, okay, so there you go. James, you got a contact there for the Isle of Wight. I think, oh, it's Sharon from the team, Portsmouth teams, come back and said, yeah, they're all set up, those reports, they're all standard. Excellent, thank you. Right, hold on, another question coming in. Robert Finlay, Jess, have you significantly reduced the volume of manual accruals input by the management accounts team? For example, increased threshold. Have you got like increased threshold for materiality? So the question is about volume of manual accruals. Have you significantly reduced the volume? And have you got a change in the threshold for materiality, Jess?
We haven't changed the threshold for materiality. The only time we will do that is on day 1, because we don't want too many transactions going through at the last possible minute that we then have to adjust for in our reporting. But generally, the transactions that are done up until day -1 are the same as we would have done previously. So the same approach is taken.
Okay, excellent. And Leanne Harvey from Central and Northwest London Foundation Trust has come in helpfully said there are standard reports set up in BI, but you can also edit them for your own specifications. Thanks, Leanne, for clarifying that. Right, I think I got to the end of the questions. We've got a quarter of an hour left to go. If anybody's got anything burning, pop it in the chat or pop your hand up now, please. But listen, can I just say thank you, Jess. Thank you so much. Thanks to the Leeds team. Thank you, Jess. Wonderful session. But thanks to everyone on the call, because I think we still got like 127 people on the call or something. What an engaging session that's been. I'm really pleased we've recorded this, because I think we've covered so many myths in here, and so many detailed issues, and really like the way we got into the detail today, starting with the Leeds team and finishing with Jess, in a way that if anybody wants to come back and watch this video afterwards, in terms of people who haven't been able to get to it or we want to go back to it, I think we've unpacked quite a lot. So thank you for all the speakers today. Thanks for taking the time to share your learning. There's so many people saying thank you right now in the chat box as well, so please take some heart from that. Really appreciate the time there. Can I also thank Megan and the One NHS Finance team for setting this up and for making sure we got the archive on some of this stuff to keep sharing this. I'm absolutely sure there's going to be a number of trusts off the back of this call that's going to move to working day 1 soon. I've got my bets on Sheffield because of the sort of questions that are being asked. But let's see what happens next. Can I make my own plea? We've had a lot of presentations now, well, we've had a few presentations now from Portsmouth and from Leeds on the last couple of sessions, which is brilliant. But I'd love it, right? Success is the next time we do one of these, that it's Sheffield or it's Humber or wherever it is. It's the next group. It's Isle of Wight. You know, it's Victoria Hospital. It's one of the it's one of the newbies that comes forward next and shares their learning, because I think that's what keeps this going. That's what keeps this momentum going. So, but can I just again one more time? Can I just thank everybody for taking the time, everybody for being so super engaging, and with that, it's 4 o'clock, and I'll probably give you a quarter of an hour back. If you're about to start your weekends, have a fabulous weekend. If you've got a bit more work to do, I hope you get to your weekend soon. But thanks once again, and we'll catch up soon. All the best. Thanks all.
Bye.
Thanks, Mark.
Thank you.
Bye.
Bye.
Thank you. Thank you, everyone. Bye.
Thank you.